Getting started in the stock market as a beginner can seem daunting, but with some basic knowledge and a solid plan, you can begin your journey towards investing and potentially building wealth over time. Here's a step-by-step guide to help you get started. Educate yourself. Start by learning the fundamentals of investing and how the stock market works. There are plenty of books, online courses, and websites that offer valuable resources. Consider reading books like The Intelligent Investor by Benjamin Graham or A Random Walk Down Wall Street by Burton G. Malkiel. Set clear goals. Determine your financial goals. Are you investing for retirement, a major purchase, or just to grow your wealth over time? Your goals will influence your investment strategy. Create a budget. Before you start investing, ensure you have a solid financial foundation. Pay off high-interest debts and build an emergency fund to cover unexpected expenses. Choose the right brokerage account. Research and select a reputable brokerage platform that suits your needs. Look for low fees, a user-friendly interface, and good customer support. Understand risk tolerance. Assess your risk tolerance. How much risk are you willing to take? Your risk tolerance will determine your asset allocation and investment choices. Start with a diversified portfolio. As a beginner, consider investing in diversified assets like exchange-traded funds, ETFs, or index funds. These provide exposure to a wide range of stocks, reducing risk. Stock research. If you want to invest in individual stocks, research companies thoroughly before buying their shares. Look at their financials, competitive position, and growth prospects. Practice with a virtual portfolio. Many brokerage platforms offer paper trading or virtual portfolios where you can practice investing with virtual money. This is a great way to gain experience without risking real capital. Start small. Begin with a small amount of money that you can afford to lose. It's a good way to learn without significant risk. Dollar cost averaging. Consider a strategy like dollar cost averaging, where you invest a fixed amount of money at regular intervals, example monthly, rather than trying to time the market. Stay informed. Keep up with financial news and market developments. Understand that markets can be volatile, and short-term fluctuations are common. Avoid emotional decisions. Emotions can lead to poor investment decisions. Stick to your plan, and don't let fear or greed dictate your actions. Review and adjust. Regularly review your portfolio and adjust it based on your goals, risk tolerance, and market conditions. Long-term perspective. Investing in the stock market is typically a long-term endeavor. Be patient and avoid making impulsive decisions based on short-term market fluctuations. Tax considerations. Be aware of tax implications. Different types of investments may have different tax treatment, so it's wise to consult a tax advisor. Seek professional advice. If you're uncertain about your investment choices or need personalized guidance, consider consulting with a financial advisor. Remember that investing involves risks, and there are no guarantees of making money in the stock market. It's important to start slowly, gain experience, and continuously educate yourself to become a successful investor over time.